Welcome to the Jay Martin Show. My name is Jay Martin, and my guest today is Jorge Ganoza, the president and CEO of Fortuna Silver. Now, Fortuna is in a very exciting place right now. They are just putting their fifth mine into production, right on plan, executing on the vision that Jorge's been on my show informing us about for so many years. Always exciting when you meet an entrepreneur who does exactly what they say they're going to do. I love it. So here's an update from Jorge. I know you're going to enjoy this. Fortuna Silver. Here we go. Okay, here I am with Jorge Ganoza, the president and CEO of Fortuna Silver Mines. Jorge, welcome back to the program. Thanks for making the time.
Jay, a pleasure to be joining you here again.
Pleasure's all mine. I'm excited to get an update from you because last time I had you on the show, we were talking about your fifth gold mine, your fifth mine coming online. And we're now less than 30 days out, it appears, from your first gold pour. Obviously, I'm talking about the Séguéla mine. So I want to cover that, get an update on the four producing mines, the fifth one coming on stream real soon, and some other updates from the company. Before we jump into that, Jorge, can you just share with me what you're seeing in the silver sector, what you're seeing in the silver and gold sector right now, and talk to me about your sentiment and maybe anything that you're hearing from your shareholders in terms of sentiment and outlook for the sector?
Well, I would have to break that in two, right? First, with respect to the underlying precious metals, gold and silver, I see a lot of a strong view on supporting higher prices, right? And we're starting to see, the larger institutions coming out with reports talking about, $2,300, $2,500, $2,200 gold this year. But for, I would say, more keen observers of the precious metals markets, there is a strong optimism with respect to where prices can go. The fact is that, for 2022, 2021, gold has remained quite steady. Our average realized prices for gold hover around $1,800 per ounce, and silver, around 22. In the first quarter of this year, we're capturing a bit higher prices, close to 1,800 and close to $1,900 per ounce. Mm-hmm. But the margin compression over the last 2 years has been very significant for the entire mining sector. So with respect to gold as an asset and silver as an asset, I see a lot of optimism. Now, moving forward, for the mining equities, I see a lot of apathy on the side of the market. Not a lot of interest yet. And I think perhaps that's explained because we have seen prices flat over the last 2 years and margin compression because of inflation. Mining is thought of as a natural hedge against inflation because of the commodity, but the hedge has not materialized because prices stayed flat for the last 24 months. And as I said, inflation continued to ramp. So we've seen a lot of margin compression across the industry. If you look at the all-in sustaining cost for the global mine supply, the median all-in sustaining cost 2 years ago was around $1,000. Today is close to $1,300 all-in sustaining. And we've been selling gold pretty much at flat prices for 2 years with all of that cost increase, right? So we look at what's coming with a lot of anticipation and expectation because I subscribe to the idea that we'll see higher prices soon, right?
And I agree with you, and I guess I'm betting with my wallet on that front. My portfolio reflects that outlook. I am seeing a lot of positive sentiment return to the majors, though. We're looking at, if you look at companies like Wheaton Precious Metals, they've seen a 100% increase in their share price. And so, cash is coming back to the equities now, short, like recently, and a lot of the majors are realizing those share appreciation gains. And so do you see this as very typical of a return to favor in the sector where, we see some physical action, then we see the majors start to get a bit of love from the industry, and eventually, those capital flows will work their way through the balance of
Absolutely.
Yeah.
You described it as it is. If we go back to 2011, no?
Yeah.
When gold peaked at around $2,000, silver was trading over $30 per ounce, and mining equities were showing what you would expect, which is tremendous leverage and a significant increase in valuation with respect to the underlying commodities. 10 years later, 11 years later, 12 years later, we're here. Gold had its best quarterly close ever. It had a record quarterly close. Q1 was a record quarterly close for gold in its history. Silver is trading at $24, $23, $22, and mining equities in general are lagging the market. We are starting to see some capital flows to the larger companies, I agree. But we need to see a better, I would say, more structure and consolidation of the bull market. And the signs will be silver catching up with gold, closing that gold-silver ratio, and then mining equities, right? I see what you're saying, and I see it as you do. We're starting to see smart money coming in, but very timidly into the more established, larger gold producers. But the big leverage will come with the medium-sized producers and emerging producers, and then with the explorers, right?
Yes. Yeah. Okay, let's jump into the Fortuna story a little bit. Maybe a bit of a refresher if anyone didn't see our first interview or is not familiar with the story. But, walk us through the bones. I believe as per 2023 forecast right now, you're on track to hit around 300,000 ounces of gold in production, 6.3 to 6.9 million ounces of silver. Walk my audience through the company story, high level, Jorge, and then we'll jump into some details.
Yeah, Fortuna is an 18-year-old company, and we have grown significantly over these years. We operate currently, I will say, 5 mines.
Yeah.
And we are well established in 2 of the most prolific mining regions in the world, West Africa and the Latin American region. For 2023, we have guided, I'll talk about in terms of gold equivalents, around 450,000 ounces of gold equivalents. About 20% of that is silver, and the balance is gold. So on a gold equivalent basis, around 450,000 ounces of gold at a competitive cost, all-in sustaining cost, of consolidating the cost base from all of our mines. We produce at around $1,350 per ounce. But what's exciting right now for us, and a catalyst for value, I believe, is that there could be no better time to be bringing a new mine into production. And that's what we're doing. We made the construction decision for our Séguéla mine, which will be our 5th mine, in September of 2021. So it's been a year and 8 months pretty much until we start producing first gold. So we're currently mining. We're commissioning at Séguéla. This mine is in the Ivory Coast, and we are set to start producing first gold this coming month of May. So in first, second week of May, we should start seeing first gold coming out. That is a flagship asset for the company, and low cost, long life of reserves, meaningful production. This year, we expect just about 75,000 ounces of gold coming out of Séguéla at an all-in sustaining cost around $1,000 per ounce. So it will be our lowest cost mine, and it will mine that will operate for over a decade.
Over a decade. Okay. And then walk me through future capital allocation strategy, Jorge. Obviously, I expect most of my viewers will be focused on Séguéla's incoming production, adding that to your future numbers. Where are you looking next in terms of capital allocation and investment?
Yes, that's a very good question, because we're coming out of a very capital intensive phase. We've been building a mine, almost 2 years now, building and developing this new mine. So it's time to harvest. No? So for us, a time of higher prices with all these cash flows, we are not a highly leveraged company to debt. Or debt to EBITDA is around 0.6. We will be looking to bring down debt, no? And then means to return capital to shareholders. We have already instituted a share buyback program, and we've been acting on the buyback program. I would say timidly, because we're still deploying capital to Séguéla, no?
Yeah.
So I believe we can be opportunistic and more aggressive in our share buyback program once Séguéla is finally delivered, again, and that's a matter of weeks.
Yeah.
No? So we will revisit our share buyback program. And then, this is an ever depleting business. So we are always looking at investing in exploration and opportunities to grow our reserve base. Currently, Fortuna has about 2.8, close to 3 million ounces of gold in reserves. Close to 3 million ounces of gold in reserves. And, between inferred resources and measured and indicated, another 3 million pretty much. So that's a significant base of reserve, but we're depleting it every day as we are mining every day. So reserve replenishment is a priority in any mining company. So you'll see us deploying capital towards exploration, and always seeking additional opportunities in the regions where we operate. And we will be analyzing those further investment opportunities against a dividend or any other means to return to shareholders, like the buyback, right?
Interesting. Okay, I was going to ask you about the possibility of a future dividend with Fortuna Silver, so I'm glad you touched on that. Any updates you want to share on other projects? So let's look at the Lindero Mine. Another, I would call it maybe flagship property in the portfolio. 120,000 ounces of gold last year, thereabouts.
Yeah, in 2022, Lindero performed quite well. It delivered 120,000 ounces of gold at an all-in sustaining cost of $1,142. So we were able to operate with very good margins. It's a mine that has a life of reserves that exceed a decade. So, and this ties to our discussion about a dividend. When we talk about a dividend, Jay, I believe a dividend in a mining company needs to meet two criteria. One, it has to be meaningful. And second, it has to be sustainable.
Yeah.
But in a mining company where you are depleting reserves constantly, you need to give visibility to your investor with respect to the sustainability of the dividend. So it's important to have operations, mines, with reserves that support a sustainable dividend, 10 years or close to 10 years in reserves. If you want to institute a dividend with mines that are, have reserves only for 2, 3 years, 4 years, is difficult, right? It's really difficult. So if you see what Fortuna has been doing with its asset portfolio, we've been bringing assets that provide that visibility, that long life of reserves. Lindero, we were just talking about that mine in northern Argentina, has over a decade in reserves. Séguéla, our newest operation, has over a decade in reserves and resources today. The Cayoma mine is getting closer to 9 years, no? And again, it's a mine that's been operating for 500. And we've been able to push the reserve inventory to close to a decade right now. Okay. We have 2 mines in the portfolio, the Yaramoco and San Jose mines, that are running short on reserves. They are both under 5 years in reserves. But we continue exploring, aggressively and trying to maintain that. But we're balancing our portfolio in a way that when we institute a dividend, we can provide the sustainability over time, right?
With current reserves, do you feel like you're there right now? I think you said 3.2 million ounces, and
we're getting there. We're certainly in a position where we can talk about longer term plans. I am a co-founder of a company, and I'll tell you, Jay, that in 2005 there was 3 of us, no money and big ideas. So when we sat, I remember, with my partners back then, and we decided to think about strategically what is it that how are we going to create value for the company. It was difficult to talk about beyond what's going to happen next month, because we had not a lot to work from. So and then 5-6 years later, we sat again to talk strategically, and our minds were all with 3-4 years in reserves. So it was difficult to talk even about 5 years.
Definitely.
Today, I sit in Fortuna in a strategic session with our team and board, and we have assets that project the life of the business for a decade, right? So we can start. We can now discuss 10 years in our planning, right? But we have gotten to that. It's taken a lot of time. This is a difficult business, right?
Yeah. Well, I mean, 18 years thus far, just with Fortuna, right? That's a handful of very steep up and downs in the sector. Would you be willing to comment on just the consequence of the undercapitalization of exploration and development in the precious metal sector over the last, I'd say, 12, 15 years? And does this strike you as a potential flashpoint? I mean, I don't know. I don't think anybody knows if the inflation of all of our input costs are going to come down. And if so, how much, and if so, for how long? But what we can look at is the supply side, right? And it's very striking to me how few new mines have been found and put into production, how little has been spent on exploration over the last 12, 15 years, and where it's been spent. And so, do you have anything you would share on the undercapitalization of the precious metal sector?
Yes, and I think it's across all sectors, not just precious metals, no? Okay. So I think, for example, a dramatic example that perhaps is more visible than what's happening in the precious metals, but it's the same, is what's happened with copper.
Okay.
The entire world has mobilized towards transitioning to electric vehicles, right? We already know that car manufacturers in Europe, California, have commitments to only produce electric vehicles by 2030 in Europe, in different parts of the world. So everybody's behind that. The gap in copper demand, in copper supply, the gap in copper supply is about 4 million tons of copper by 2030. 2030 is 7 years from now. It's around the corner, right?
Yeah, it is. Yeah.
Yeah. What's a big copper mine in the big scheme of the biggest copper mine in the world is Escondida in Chile. It produces about 1.4 million tons of 1,400 million tons of copper annually. But a world-class copper mine, excluding Escondida, which is just a big animal, is about 400,000 tons of copper annually. That's a big copper mine.
Yeah.
I would call it a world-class copper mine, 400,000 tons of copper a year. You would need to bring about 1.5 of those big animals every year into production to meet the gap in copper supply. It's impossible that will ever take place because just the permitting process for a mine like that takes 10 to 15 years. And the discovery, going back to your original question, no? The exploration and discovery of those deposits takes, if you're lucky, from discovery to a construction decision, 15 years, if you're lucky. And no one has been exploring for those things for years. I mean, there is a lot of underfunding in exploration. And I think the case of copper is easier to visualize, but the same thing is happening in precious metals. You look at all the exploration companies, they are underfunded, struggling. They're raising capital basically to keep the lights on, not to do meaningful work.
Sure.
So I see the situation as difficult, challenging. Now, it creates a window of opportunities to companies like Fortuna, because then we can go in and perhaps make acquisitions or joint ventures, right? But in the bigger scheme of things, it's a problem for society, not just, the mining industry.
Yeah.
We are the ones who provide the raw materials upon which society is built and functions. And that's difficult to comprehend to many, right?
Yeah, but I agree 100%. And I also feel like people in general are becoming more aware of where the stuff they need comes from. And maybe that's on the back of celebrity CEOs like Elon Musk mainstreaming, the electrification of vehicles, for example, putting an emphasis on copper demand and lithium demand and all this stuff. And there's been a bit of a merge between the commodity sector and mainstream culture, mainstream media. That doesn't directly correlate to investment, but I think it's a step down that path.
But I would even say that there is a struggle going on, because a lot of the champions behind the electric energy revolution are the same groups that are adverse to mining.
Yeah,
if you look at what's happening in some of the jurisdictions where mining takes place, big mine, there is a big anti-mining, anti-extractive industry movement.
Yeah.
And then we all want a better world. I think mining has decisively shown by now that we can conduct the business responsibly. Society is measuring, not just mining, but everybody is measured against heightened environmental standards, environmental and social standards. And mining is meeting all of those heightened expectations and exceeding some of those expectations. So, but, there are groups that are ideologically obsessed. And instead of being pro-environment, pro-human rights, they're just anti-mining.
Yeah, I know. Well,
I am a bigger champion for the environment and social rights than a lot of those groups, because they're not pro-environment. They're just anti-mining.
They're just anti-something. Yeah, exactly.
Anti-something.
Anti-something. Yeah, well, it's the kind of the biggest joke on the voices opposed to fossil fuel industry and the extraction, this call to end all fossil fuel use. But is it realistic to think the same groups and voices that are calling for an end of fossil fuels will suddenly pivot and say, and now please permit every single mine required so that we can actually build the renewable energy power to supplant the fossil fuel industry? It's like, I can't see that happening. But that's what it's going to take, right? Like, this is going to be this foreseeably would be the biggest commodity boom generationally, maybe ever, in order to build just a straight tech to.
We subscribe to that, and precious metals will play a pivotal role because we have seen over the last years asset class bubbles, like Bitcoin, right? And the instability of the world economic system, and gold will always be that refuge. There are times where people, lose a bit of faith on the precious metal, call it that archaic relic. But there is no one who prays with more devotion than an agnostic in trouble. So when shit hits the fan, they'll be buying gold.
Yeah. That's a great quote. And it's happening. I believe it's happening. At my conference in January in Vancouver, we saw a larger number of first-time resource investors than I've ever seen before. And they weren't new investors. They were generalist investors, but they were new to the mining sector. And the most common question I got walking around the floor in January from investors was, how do I get started? Some variation of that question. Where do I begin? How do I allocate capital? Whose newsletter should I read? All of these things. And it struck me as very interesting because I've never had that question in such abundance at what is a very niche conference. And my conference is very niche. It's junior mining investment, right? We're very specialized. And, simultaneously, I was just chatting with Randy Smallwood, who got back from 2 weeks marketing in Europe and Asia. He said 30% of the meetings he took were investors who were new to the commodity sector, but they had suddenly turned their attention towards precious metals for a variety of reasons, chaotic instability on the geopolitical chessboard. There's no shortage of catalysts right now to look towards the precious metal sector. But people are starting to do it, I guess, is the point of this. Yeah.
Yeah, no, I see it. I haven't seen, I remember back in 2010, 2009, going to present and market our company in European cities, North American cities, and we would meet with mainstream fund managers, guys who are not committed to the industry, and they just wanted gold in their portfolio and mining equities in their portfolio. Over the last decade, I think what we've seen mostly is, the Sprots, the usual suspects in the sector. And again, gold is trading higher. And the fact that silver has not followed suit yet, or mining equities have not jumped yet, to me is a sign that this is the start of the bull market in gold. Now, I have to say, Jay, that that's my personal view on things. But when we run the company, we're very much agnostic on prices, because we need to operate a mine that can perform and excel throughout the precious metals price cycle. And that's really what provides optionality to the investor, right? So we try to run Fortuna as if prices were going to be depressed for the longest time, right? And that's really how I believe you should run a mining company. That guides the type of assets that we bring into our portfolio. That guides the type of organizational structure we have, how we allocate capital. We want to really be the best call option for our investors. And if our thesis does materialize and prices run, we'll all benefit greatly. But if it takes longer than we think, and we see some violent price swings in between, you have to be calm that the company you invested in is still performing well and still thriving even in that price environment.
Well, that volatility is the only guarantee in the mining sector, isn't it?
Yes. No, it's a difficult business, and we have no pricing power, right?
Right. Right.
So we really have to focus on the things we control, and that's cost and the type of assets we acquire, which provide the opportunities to operate with low cost, right?
Well, look, Jorge, I just want to share with you, I think Fortuna is an excellent place for investors to look, but more importantly, I think you're a very important leader in the resource business. And I'm glad that you shared your 2005 start, right? You and a few people in a boardroom with no possibility of making long-term plans at that point. Fast forward to today, 18 years later, you're opening your fifth mine. Your fifth mine in another great mining jurisdiction, providing investors great diversity and optionality and security. And over 18 years, you've been a phenomenal steward of shareholder capital. It's what we need in this business. And that's what will attract new capital to the business, is good examples and role models and mentors. And, I appreciate the role you play in this business. I think, you're a leader in this industry and greatly appreciate it.
No, thank you for that. Fortuna is close to 5,500 men and women making it happen every day. That's our workforce. It's diverse, but it's 5,500 men and women that make Fortuna happen every day, and it couldn't be done, of course, without them. And I'm really privileged to be able to provide leadership to that group of people, right? So I have a great team, and we do make mistakes. We just try to keep them small, and march on, right? Yeah.
Love that. Well, congratulations on your success. Thanks so much for coming back on the show and chatting with me again, updating myself, my audience on the Fortuna story. I appreciate it.
Yeah, look for in the coming days. I think the countdown for first gold at Séguéla is a matter of days. So, keep an eye and watch for news releases. And our investor relations team does a good job keeping the website updated with videos and the photo gallery. So that's always exciting. And I direct your audience to the website. Yeah.
All right. Well, we'll include a link for that. And thanks again. I really do appreciate it.
Thank you, Jay.